Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial whispers of big companies and try to make sense of the corporate jungle, so buckle up because today we are looking at Perimeter Solutions Incorporated's latest filing. And let me tell you, there is a juicy acquisition that just went down, so before we get into the nitty-gritty, if you love getting the inside scoop on what really matters in corporate finance, make sure you are subscribed and also join our Discord community linked in the description below. It is where we break down even more stuff and chat about all things business. Alright, so Perimeter Solutions Incorporated, a company that provides specialty chemicals and solutions, just announced the completion of a pretty big deal. They acquired Thunderbird Midco LLC, also known as MMT, their subsidiary Perimeter Solutions. North America Incorporated was the one doing the buying, and the price tag was a cool $685 million. That is a lot of money, and it is all happening as of the 22nd of January 2026. This whole acquisition was laid out in what they call a securities purchase agreement, which is basically a fancy contract outlining the terms of buying and selling a company. Perimeter Solutions North America was set to buy all of MMT's stock from the sellers for that $685 million figure, with some standard adjustments to make sure everything is fair and square. The filing details that the company is incorporated in Delaware and has a commission file number of 001-41027. They are a publicly traded company, so they have to file these reports with the US Securities and Exchange Commission, or CSE. Their stock symbol is PRM, and you can find it trading on the New York Stock Exchange. It seems like they are not considered an emerging growth company, which means they are following all the established rules and regulations for reporting. Now, this part is interesting. It talks about a press release that came out on the 22nd of January 2026 announcing this acquisition completion. They are saying this information is being furnished and not officially filed. This means that while it is public knowledge, they are not taking on the same legal responsibility for accuracy as if they had formally filed it within the report itself. It is a bit of a technicality, but it is important for understanding how companies manage their public disclosures. This section is where the real action is because it confirms the completion of that acquisition we talked about. The deal was officially closed on the 22nd of January 2026. The company mentioned they financed this big purchase using cash they already had on hand and money they got from selling senior secured notes back on the 2nd of January 26. This suggests they were planning this acquisition for a while and had a financial strategy in place to fund it. The agreement itself has all the usual clauses you would expect in a deal like this. There are representations, warranties, and covenants. In simple terms, that means the buyer and seller both made promises about the state of the business and agreed to do certain things or not do certain things. It is designed to protect both sides and make sure everyone is on the same page. The filing also gives a heads up to investors. It says that these promises or representations in the agreement were used to divide risk between the parties rather than being absolute statements of fact. Plus, things can change after the agreement is signed, so investors should not take these promises as guarantees of the current situation. This is a really important disclaimer you see in these types of filings. It reminds us that these contracts are complex and are meant for allocating risk, and not necessarily for painting a perfect picture of reality. And of course, since this is a significant event, they are including the actual securities purchase agreement as an exhibit along with the press release and an interactive data file. This is great for anyone who wants to dig into the nitty-gritty details of the deal themselves. Now let's think about this acquisition. Perimeter Solutions is buying MMT for $685 million. This is a significant move that could mean they are looking to expand their market presence or gain access to new technologies or customer bases. When a company makes a big acquisition like this, it usually signals a strategy for growth and increased market share. We will need to see how MMT fits into Perimeter Solutions' overall business and if it contributes to their revenue and profitability in the long run. The fact that they used existing cash and new debt financing means they are betting on this deal paying off and generating enough future returns to justify the cost and the increased leverage. This acquisition is a big step for Perimeter Solutions Incorporated. By buying MMT for $685 million, they are clearly aiming for significant growth and expansion. They funded this purchase with a combination of cash on hand and proceeds from a senior secured notes offering, which shows they had a solid financial plan in place for this deal. Looking at the broader implications for Perimeter Solutions, it suggests a strategic move to either bolster their existing market position, enter new markets, or perhaps acquire valuable technology. The success of this acquisition will ultimately depend on their ability to integrate MMT effectively and leverage its assets to drive future revenue and profitability. For investors, this is a key event to monitor as it could significantly alter the company's financial trajectory. So what is my take on all this? Well, Perimeter Solutions is definitely playing the growth game. The acquisition of MMT for a substantial $685 million is a bold move and shows ambition. They seem financially prepared with their cash reserves and recent debt issuance. The main risk here is always integration if they can't merge MMT smoothly into their operations and realize the expected synergies. This large investment could become a drag. But if they pull it off, Perimeter Solutions could see a significant boost in their market standing and financial performance. It is a calculated risk for what they presumably believe is a significant reward. Alright, that is our breakdown of Perimeter Solutions Incorporated's latest filing. What is your take on this acquisition and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.